Welcome to TheoTrade. This is Don Kaufman. It is September 28th, 2016. Once again, we've got the S&Ps here with just about a minute to go to the closing bell, up another 12 to the 2165 handle, clearly and decisively above that 2153 that we've been talking about so often here. Much of today's upward momentum, dealing tremendous amount, of course, with oil. If you haven't seen oil, you haven't seen one of the largest moves again on the trading day. Oil, well, there was a meeting. OPEC does have some form of an agreement that they're going to be cutting production, but that's not till November. Wow, how short-sighted is a marketplace? Well, look no further than oil. So on the heels of the announcement from OPEC, the market explodes a bit higher here. Again, S&P's ending up 12. Volume out there, not staggeringly high inside of the S&P futures today. I mean, getting it done, but 1.6 million contracts. So today, I want to look at a very specific trade that I actually entered into, and that happens to be on Amazon, a contrarian style position. So I'm going to explain it in a little bit of depth during this evening's kind of Theo night video. So Amazon, as I said, I entered into a short duration, bearish position on Amazon. Now, that is with the stock exploding to the upside. There's a number of factors that led to the bearish stance here in Amazon. Number one, there's the bell, of course. Again, S&P's closed up the day about 12. So number one here in Amazon, I'm going to go ahead and close up this left side bar. You know which stock we're talking about. We're talking about Amazon. On the day, it's going to end up about $12.61. First and foremost, we'll start at the chart, On this chart, it happens to be a 9-month daily. It's a freight train to the upside. The stock is getting really lit just the last couple of days and has made what we'll term a statistically significant move in just the most recent 10 trading sessions. I'll go through that here momentarily. So why would the stock exploding up would I stand in the way of a freight train and possibly want to get short? Number one, it's towards the end of the quarter. Amazon has been one of the best performing stocks out there. Hands down, S&P 100, it's one of the best performing stocks. Portfolio managers are very likely, diving into Amazon. If they're not into Amazon, they have to be in Amazon by the end of the quarter. Nobody wants those quarterly statements to get mailed out without the letters AMZN on that quarterly statement. Think about it. It's what they often call portfolio management window dressing. If you've ever heard the term window dressing, they go out there, dress the portfolios. Now, I don't believe too heavily in that. Nevertheless, it's fairly compelling for the move up in Amazon. And with all due respect, it makes a lot of sense why Amazon is exploding higher. You have Walmart, Target, and Costco all off. Why? They haven't performed very well in the quarter. You look at something like Costco, you're like, oh yeah, you're crushing that. And it has earnings coming up. You look at something like a Walmart over there, it hasn't performed during the quarter. What do? Dump it. We don't own Walmart. No, of course we own Amazon. So that's, again, a little bit of a case for the window dressing over there. Now, what I mentioned and what really drives me to do trades is, listen, this has nothing to do at all, with a fundamental case for Amazon. I don't care what the price target's going to be. I saw, again, one of the analysts went out there. I need not mention their name. Why give them any credit? But they put a price target on there of $9.50. Yay! Congratulations! You give Amazon a price target of $9.50. Guess what? I can go over to the trade tab here on thinkorswim, and I can cruise out, I don't know, about 142 days. Just bear with me here for a second. You cruise out about 142 days. Its expected movement is $130. To put a price target of like what? I don't know, $9.50 on there? Of course. Why wouldn't you do that? There's a pretty good statistical chance that's going to happen. But can the stock back off too? Sure. So you got to look at this as a nice little bet on the behalf of the analysts, where they go, it's a price target of $9.50. Yeah, well, it's 142 days out, very likely to happen. Now, give the stock even a year You go out here like 261 days, clearly that's not a full year. There's a $174 expected move, right? So it's pretty easy to hit price targets and to throw numbers out there. Hey, they're bullish. Great. I'm not asking for, again, any fundamental cases here whatsoever. I mean, hey, even at TheoTrade, we use the Amazon cloud. Of course, okay? I've got Amazon packages sitting in front of my house all day. That has nothing to do with a statistically significant move, though, in a short duration of time, okay? So bear with me here as we kind of count back day by day. Right now, closing the day, somewhere in the neighborhood of about 8:30. Okay, that was about the high of the day. We closed just shy of it. Now, that's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 trading days on the button. 10 trading days ago, we were at about 760. Here we are now, what? About 8:30. Do some quick math over there. What do you got? About $70. All right. That's a pretty big move, a $70 move in 10 trading days. So I'm going to go out, okay, now this is calendar days in the trade tab of thinkorswim. It's the calendar days, so it's 16, okay, calendar days left in there. And a normal move is about, what, $30. So what do we move? We moved about $70. We're over 2 times the norm. All I'm using, okay, to enunciate like a statistical significant move is what options are looking at in terms of forward pricing. Now, forward pricing, all right, we're just taking like the at the money call, the at the money put, adding them up, yada, 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 comes out to about $30. Okay, well, we've moved $70. So we're over 2 deviations. Now, if you looked back in time, and people want to look back in time, okay, why do you want to look back in time? So you can curve fit. I know what you're thinking, but let's look back in time. So let's go back, for example, 2 weeks. So here we are on the 28th. You go back over here 2 weeks. What were the option prices looking like then? All right, here's an option that expires. Oh, September 30th. That's this Friday. Look, the expected move was $27. We've moved almost 2.5 times what was expected. So what we're looking for and why we're actually making a contrarian trade inside of Amazon has nothing to do fundamentally and everything to do with the fact that the stock becomes statistically stretched. I don't even care that it is Amazon. Now, there is one thing you have to be careful of if you're going to enter into this type, okay, of a trade. First thing, you got to look over here at the trade tab, close up all the option chains. Okay, and I think that the trade tab does this a much better job of it. Look over to the right-hand side of your screen. That stands out, okay, pretty big to me. What is it? It's earnings. So you better exclude using anything in the 30, 37-day window because earnings, you might as well just flip a coin. I don't know what it's going to be. All I know is the end of the quarter, okay? Amazon's being gobbled up by the portfolio managers that don't have it, all right? It's the place to be. It's statistically stretched over there. All I'm asking for in the next 23 days, all right, I'm going to use 23-day options. I just need Amazon to come in a little bit. What that basically means is go down. Not asking for a lot, just a couple of bucks over there. And when it comes to building these trades, it's all about the logic of the trade. It's not so much about like, oh, I really need Amazon to sell off over here. I need Amazon, okay, in this particular case, to be below $820. I mean, it's pretty amazing that you can go out there and you can trade an $830 behemoth, the $830 gorilla in the room, and you can trade it for, one contract having what, $250 of risk on the table. Okay, and that's it. So we're going out there. It's a $5 wide spread, and I'm risking, okay, about $250 to be able to make a decent and small return for a stock backing off sometime in the next 23 days. Thanks, everybody, for joining us here at TheoTrade. Be back on in TheoTrade chat all this week, looking for some trade ideas. Have a great evening. Bye-bye.